Good afternoon, everyone, and it's Alissa, Coram, and Justin Nielsen here with a look at the market for Monday, April 17th. And we're getting close to the tax deadline. It's also a busy earnings week, Justin, and stocks kicked off this week with some modest gains.
Yeah, so I mean, I think the story of right now is resilience for the market, but not really progress. So we'll take a look at a few stocks that are setting up, though, including Broadcom, DoubleVerify, and Decor.
Yes, we will get to those stocks, but first let's take a look at the major indexes. We saw the Nasdaq, Dow, and S&P 500 all up about 0.3% apiece today. Small caps did lead with the Russell 2000 up about 1.2% heading into the close. So a strong gain for small caps, which are still trying to rebound from that March rout. But here's a look at the Nasdaq. As you said, we are seeing a resilient market on the surface. But what about underneath the surface?
Yeah, underneath the surface is it's a kind of a different story. We talked on IBD Live this morning about how the new highs and new lows still being overwhelmed by the new lows overall, and this is where sometimes the big mega cap companies can kind of mask some of that weakness because again the indexes don't look bad by themselves, but there's a lot of stocks under the surface that just aren't making much progress. And there are some that are failing out there. Now we also, as you mentioned, have earnings season to contend with, starting to ramp up. It's going to get even busier over the next few weeks,
Yeah.
kind of peaking probably in 2 or 3 weeks. So we've got that to look for. So of some of these setups that we're seeing out there, which is great because you're seeing the index kind of make a little basing formation here, and a lot of times stocks will kind of follow along with that. The problem is going to be, are their earnings going to be coming right around the corner? I mean, just as one example, take a look at Netflix, which is carving out a nice little cup with handle there, but earnings, coming up, and I think we're going to see more and more of this as we go on. Looking at the S&P 500. We've got that one also showing some good gains, and that one's making a little bit more progress, kind of getting
Mhm.
closer to those February 2nd highs, and definitely clearing the resistance from just a couple weeks ago, those highs. So a little bit better there, but the Russell 2000, as you mentioned. Even though that was leading today, I mean, look, that still
It's had the
has a
biggest
lot of
swings.
yeah,
Both directions.
it's got a lot of work to do. You've got a lot more of this back and forth, and again, what you're kind of seeing here though is in a lot of ways a lack of progress. It's just it's got some big days there, but it's also got some big down days. So you're just not seeing too much movement forward, and that's what's been frustrating. It's about this market. Things are setting up, looking like they might go, but at the end of the day, you're kind of like scratching your head. Am I really making progress? Is it worth it even?
Hmm. So we will be on the lookout for even better market conditions because it's when we're seeing strong market conditions and then underneath the surface, stocks acting strong. That obviously that's the best case scenario for active investors who have concentrated portfolios.
Yeah, and we just need this isn't a very forgiving market. There's a
Yeah.
lot of times where you have the indexes going well, a lot of stocks are going well. You can make mistakes and not get punished for it, or uh, there are those types of markets where it doesn't really matter what you buy, everything's going up. That is not the kind of market that we have right now. So it's less forgiving. Does mean that it requires more discipline, and
Mhm.
that's why they call it a stock pickers market, because it's not just like you can throw a dart and think you're gonna do okay. It really is picking and choosing those best stocks out there, and making sure you have the risk management in place, because a lot of these stocks aren't working, and so you have to make sure that you're cutting losses quickly and getting out before things turn ugly.
Yes. Now let's take a look at the 10-year Treasury yield. Here's 0TNX continuing to make gains here. Looks like it's developed a trading range, but honestly, the recent momentum looks like it could soon get back above the 50-day line, although
Yeah,
might hit resistance there.
that's the question, right?
We'll have to
We
see.
got back above that 200-day moving average line, and again, you might think, well, gosh, do the yields really matter? I mean, do the moving average lines really matter on the yields? it's amazing how sometimes they do, so just as with anything, the way the trends work. So now that we are back above that 200-day moving average line, I think it remains to be seen whether or not we're going to cross that 50-day moving average line. There's still quite a bit of uncertainty. We keep on getting Fed talk. Just on Friday we had, hey, we need more hikes with an S at the end, from Waller, and that's just one of those things that we have to contend with, in addition to, as we also saw last week, not just the inflation fears, but also recession fears too. So there's stuff that we have to deal with here, and that's going to be one of those uncertain parts of the market. Not that that's going to hold it down. I mean, a lot of times the market is climbing a wall of worry, but we still need more evidence that more stocks are willing to participate and follow through on more of their strength, and continue trending.
Right. Yeah. A lot of cross currents here that we will stay on top of, because we also have more bank earnings this week. So that, even though I think the heightened period of the drama surrounding the banking crisis has, by and large, subsided, we could be getting more color on that from executives in the coming weeks with these earnings reports coming out.
Yeah, and I mean, just as an example of that, if you pull up KRE as kind of a representation of the regional banks, you can see how, in March that just got thrashed after SIVB failed, and other banks were, coming under pressure and failing. But if you look at XLF, XLF, the financial sector spider ETF, is by no means super strong, but it's not nearly as bad. And I mean, we started seeing, the likes of JP Morgan and stocks like that were showing pretty strong numbers in terms of deposits and things like that. So you look at JP Morgan, and that's already back above its 50-day moving average line. So a very different picture for
Right.
the big behemoths in that space.
Okay, we also want to take a look at RSP. This is the S&P equal weight. Looks like it also is going sideways and tight here, hitting some resistance at the 50-day line. Is it a concern, Justin, that we are seeing perhaps some underperformance here? It looks like in the equal weight, it's showing that the advancers are still somewhat concentrated.
Yeah, exactly. I think, it's a good idea to take a picture of how this compares to the S&P 500 itself. It's a very different look. S&P 500 above its 50-day moving average line, nearing those February 2nd highs. RSP, which again, as you mentioned, it's the equal weighted. So when you don't treat the mega caps differently and give them a lot more weight, and you treat everything kind of equally, it's really a different picture. We're a lot further away from those February 2nd highs, and we're underneath that 50-day moving average line with potential resistance there.
And we want to take a look at some sector ETFs quickly. Here's SMH. Really, the story today in the chip sector was the chip equipment stocks like AMAT, although it looks like it did close off lows, so that's good to see. LRTX, it was some of the semi equipment stocks that were hit in the early going, but it looks like they were able to close off lows, so some resilience here. That seems to be the theme with the market, but also this group.
Yeah, and it was something that I think did spook some folks. ASML was one in particular that it really kind of gapped down below that 50-day moving average line, undercut a recent low. And as you mentioned, a lot of these did come up off of their highs and close in the upper part of the range, but that was still off 4%. And again, this was kind of based on Taiwan Semiconductor saying that they were going to be reducing some capex spending, and so you've got a lot of these that were hit hard, and this has been one of the bright spots in the market. So you just have to be cautious there when you're seeing some of the bright spots come under pressure. And again, there is that resilience level that you talked about. SMH is still above the 50-day moving average line, potentially getting some support there, and they did close off their lows. So we'll just have to see if
Yeah.
this make sure this doesn't turn into something a little bit uglier for
Hmm.
one of the bright spots in the market.
Yes, absolutely. We want to take a look at XME. This is the metals and mining ETF. Looks like it advanced a little bit today. We've seen some improvement since the low in mid-March, but it seems like we're seeing some metal and mining stocks that have been looking relatively decent. Your thoughts?
Yeah, I mean, this is where the metals and mining are very different, right? Because you have like the steel stocks like SLX that are looking weaker, looking a little bit more like XME, but then you also have like the gold, GDX. And GLD, either of those, are showing a very different picture, a lot more strength there. You also have the ones like, yeah, Freeport McMoran and SCCO. So it really kind of depends. When you say metals and mining, it depends on what metals you're talking about and what you're mining. So it's just something to keep in mind when you're looking at some of these ETFs. And Ed had a really good comment on this, just last week, talking about you really kind of need to know what's in there, to make
Yeah.
sure that you're truly getting what you think you're getting. Because if you're wanting to participate in gold and you think metals and mining is the way to do it, you might be a little disappointed there.
Yes. Okay. And now let's just quickly take a look at two more ETFs. We've got ITV here. Here's the home construction ETF hitting its highest levels now today in a couple of months. So back to its February highs. We also have XLRE with a strong day today up at 2.3%. It's been a laggard though, but it
Right.
was decent today with that
Yeah.
outperformance.
So it was the of the 11 sector spider ETFs. This was the top dog, up 2.25. The next closest one was XLF, which, as we mentioned, has also been a little bit of a laggard. So you just have to be careful when you're seeing some of the laggard areas show the strength. That's not necessarily giving you all that much confidence for the day. But again,
Mhm.
we're back to that word of the day, resilience is what we're
Yes.
seeing right now.
Okay, and we mentioned the chip sector, so let's go to one of the chip leaders, Broadcom, ticker AVGO. It finished up on the day by about 1.3%. Volume was light, so it's not bouncing from this 50-day with conviction yet. The test of support is still happening, it looks like. But for a stock that has made huge strides since bottoming in October, seeing a nice orderly pullback in quiet volume to these moving averages could be a compelling setup. What do you think, Justin?
Yeah, that's what I like about it. It's again that nice quiet volume, and we're seeing a lot of that quiet volume in a lot of places, and unfortunately, sometimes on the bounces and the breakouts too, which is not ideal. But right now, the volume is quieting exactly where you'd like to see it on the pullback. Now we just have to see if we get a bounce. What I do like also is, as you pointed out, as we looked at earlier, SMH, the broader sector. Was getting support at the 50-day moving average line and closed off its lows, but still down slightly, a little bit flat. At least Broadcom was able to kind of close up pretty
Mhm.
significantly. I mean, up over 1%. So that's pretty strong. We just need to get that volume confirmation to kind of give us more conviction behind some of these moves.
Yeah, and I'll set an alert from this high from last week, see if it can take that out. That would
Not
coincide
a
with,
bad place to set it.
yeah, getting above the 10-day. It's right at the 10-day and 21-day line. But we'll see if it can just get a little bit more of a bounce in some volume. That would be great. Okay, let's take a look at DoubleVerify, ticker DV. Nice and tight action, looking like it's now finding a home above this round number of 30. It's, of course, just the first day of a new trading week, but maybe we get a 3 weeks tight here, Justin. It's had some strong moves over the last couple of weeks and is now quieting down.
Yeah, and we were talking about this kind of internally today, and one of the things was it's not like there's a moving average line like the 21-day or 50-day line that it's kind of getting support at, but that 30 is very compelling. I mean, if you kind of just look to the left, you can see that 30 was kind of an area of resistance, and even if you go to the weekly, you can kind of see it going further back. So there have been a number of times, even going back to February of last year, where that 30 area did kind of become important. So the fact that you're kind of tightening up right around there, I like that you're building a platform, something from which you can launch from. And again, here we have another situation where the volume has really trickled off on this one, like you would like to see. So again, if we can kind of see that volume come in and a strong move together, that would be enough to get me interested. And
Mhm.
it's also worth noting that the computer software enterprise, specialty enterprise, that those have been a group that have been looking a lot stronger.
Yeah, I was
Some of
just
these have
gonna
been coming
say.
off their bottom, but this is number 20 out of 197, so it's got some group
Yeah.
action
Yeah,
support.
and man, it's kind of been a while since we've seen
Yes.
software in the top
Right.
20.
Yeah, especially the
So,
enterprise, which was
yeah.
so strong. But I mean, you look at a lot of these groups really topped in February of 2021. So it's been a
Mhm.
minute since they've been leading.
Yeah. Okay, now let's take a look at FND to round things out. And speaking of round, that 100 level seems to be a clearly round. I guess let's just see how far back. Let's just see how far back the line can go. Why not?
Right.
But there's a lot of points touching that area, Justin. We can take a closer look on the daily chart as well.
Yeah, so you can just, as you said, it's that 100 level that I think is a real big level of interest here. It's been butting its head up against there as volume has been trickling off. So the question is, can it get above there and hold above there? And so
Mhm.
it's in that. We pulled up ITB earlier. The home builders have been one of those areas of strength. This is kind of along with that, and as home sales, existing home sales improve. That's something that they really look at, and I would highly recommend for folks to look at the stock of the day today. That was written by Jed Graham, who does so much great work for us on Fed days and on economic news. And so he really kind of broke it down, what the 30-year fixed mortgage means for floor and decor and existing home sales and everything like that. So it's a very interesting kind of play that you're seeing.
Mhm.
Not a lot of people would have thought that home builders would have been an area of strength, and
Right.
given the rising rates, but the stock market's going to do what it's going to do, and it's looking forward. And so far, it seems like it likes what it sees. And so this is an area where we keep on seeing setups, and I can't find any fault with the base that Floor and Decor is forming right now. We'll just have to see if it can do something with it.
All right. Well, thank you so much, Justin. And thanks everyone for tuning in. We'll be back with more tomorrow morning on IBD Live, and we hope you join us. Investors.com/IBD Live for all the details. We'll see you there, and we'll also see you right back here tomorrow at the close.